The one that I was wanting to start with was actually the one that I was kind of directed to and was most interested in, because I had seen this link from Muddy Waters Research going to a YouTube channel where we have found the rabbit hole of residential solar panel shenanigans. Um,
Yeah.
how many of these videos had you gotten the chance to watch? Because I'd watched all of them, but I had all watched them during the work week. And so Saturday, after I'd helped my mom with her garden, I was like, okay, I'll go over these, do a refresher. And then I realized that these are like 20-minute videos of pop. And I'm like,
Yeah.
so
Yeah.
we'll see how much of them I actually remember.
Yeah, I got through four of them. I mean, full disclosure, I put it on time and a half.
Mm-hmm.
But dude knows his stuff. I'll give him that.
Mm-hmm.
Um, like I just didn't like IRS stuff. Haven't done a lot. I mean, I'm a CPA, but I just haven't done a lot of tax stuff.
Mm-hmm.
But like the stuff he was claiming is pretty damning.
Right.
I do know, like the problem is with the IRS stuff, like, people lobby for a certain treatment, um, and then usually what happens to that treatment, you can drive a truck through it in terms of like valuations and kind of subjective part of accounting stuff. So you end up kind of like diving into stuff what he talks about where you get these overvaluations where they can get bigger tax credits and this and that.
When a PPA, or a lease system for that matter, is sold to a shell company, the solar company bases the price on the fair market value. The higher the fair market value, the bigger the tax credit. This creates a massive and irresistible incentive to inflate the fair market value. In today's solar industry, a $30,000 solar system with $9,000 in tax credits is magically transformed into a $50,000 solar system with a tax credit of $15,000. Every time a solar company inflates these values, $6,000 are stolen from the American people.
So like it
Yeah,
was
that was
scary.
the first video that kind of explains the other videos. It was how residential solar companies get away with $50 million in tax fraud. And it also explains how these solar companies actually make their money. And it's not off of the actual residential installs. I don't want to go through the whole video because it's like I said, these are each like 20-minute videos. But to get you up to speed, Platinum, on what's going on in this video, basically in the video that kind of also helps explain the balance sheet stuff, it basically explains how most of these residential solar companies make their money. And most people can't afford like having solar panels put in, and because you have the solar system, the battery pack, and then you got to put it into the actual grid and stuff like that. So what they do is, instead of you buying the system outright, they lease it out to you, and then they take then you get a certain payments that you have to make, and certain kickbacks, and then they take the tax credit. But they don't just take the tax credit and put it on their balance sheet. They take the tax credit and then they spin it off to this subsidiary company that securitizes it and then sells it to other companies so that they can get their green energy credits.
Oh, okay.
And this whole process is how these residential solar companies actually make their money. In this kind of shady tax scheme kind of way.
Interesting. I did not know that.
But it's it's an interesting watch. It's like about 15 minutes, and it kind of really opened my eyes up because I had no realization that this is actually how the game is played.
You had to watch it a couple of times to understand what he was like. It's a well put video, but it's so jarring. It's like, God. I mean, I do see like the private equity stuff. It's not. I mean, when you really think about it, it's not super surprising this day and age. Like private equity comes in and guts stuff, right, to get the free cash out of things. Like it's not. It's really kind of the next step and all that, right? I just didn't think it was going with solar panel stuff. Like people got a certain view of accounting, and it's really a lot of it's fairly subjective. Once you get past, like just your regular sales and stuff, there's a lot of gray in what you do, like reserves. Because when it's not a known thing, like you're just buying a cell phone or you're doing this or doing that, you're relying on estimates, right? So the company comes up with their own like range of estimates, and the auditors will come up with their own range of estimates based on their knowledge of other companies, and it's like you're trying to find the middle number that the auditors, they're not going to audit their own work, but they're going to come up with a number like, okay, this seems reasonable given everything that's going on, but they're not solar experts, right? So it's just even in the context of this example, like it could just be off, right? I know there's a lot out there, but it's such a high bar to get to fraud. But I mean, I've seen 20 years of bad spreadsheets, right? And people they do what they're gonna do.
So, speaking of the accused fraud here, before we get into it, I want to say that this is not particularly new. This actually came out, let's see here, back in April is when Forbes reported on it. But basically, what we're going what's really the most funny part about that is 2 months later they filed for Chapter 11 bankruptcy. So
Yeah. Yeah.
maybe there was a reason they were cooking the books. Who knows? Still didn't work out for them.
Yeah,
But
seeing a section called just straight up plugs, like, oh, that's not a good look.
that's definitely well,
But if you go to cell EN567, there are instructions written in plain English saying to use the same number in both places. And then it says to only show the total row. And based on how Sunnova reports its numbers, that has the effect of covering all of this up. Now, not only does the math show these instructions were actually followed, but the instructions themselves are recorded as being written by Kat Scherer, which just happens to be the name of Sunnova's Director of Financial Reporting. So yeah, I thought that was really strange. How did all of that happen?
Here's the funny thing about it is, so how people found out about this balance sheet was, it was a private in-company balance sheet that was put on a Google Drive that they forgot to properly secure. And so someone just went into the link for the Google Drive and got it.
See that happening, right?
And then they did a good job. Like he explains in the first video. Let me pull it up here. I'm not going to actually play it, but it's in this video here. I have Sunnova's second set of books, where basically there were things that he noticed in the spreadsheet that were referencing to things that he couldn't find, and he found out that they were locked, so you couldn't access them without a password. So, but they didn't disable copy and paste. So he just straight up copied the entire Excel spreadsheet, repasted it, and then once it was in a new book, he could disable the secure lock and then get to the second set of books that they were hiding in their own books.
Wow.
Which I think that's why he's saying he's using the F word, because it looks like a very dedicated effort to hide or, keep from public view what exactly is going on.
Yeah, and the customer account stuff, I do think he had a point there, because I think they were monkeying. It felt like they were kind of messing with.
Yeah, I think that was his fourth video where he was talking about that they were monkeying around with what accounts were considered solar, which ones were considered battery, and which ones were considered security accounts, I think.
Now, before the moment of truth, let me explain what we would expect to see if these numbers were done correctly. Batteries are worth around half as much as a solar system. So what's essentially happening as you see the percentage of battery customers increase gradually is you see Sunnova flooding these numbers with an increasingly large number of what are, in effect, half-value customers. Now, Sunnova starts with virtually no battery customers. As they begin to add more and more of these half-valued customers, eventually going from 0% to 20% of the total, you would expect to see some kind of noticeable effect on the average customer value. Now, okay, there is some statistical noise, and there are some slight differences in value between leased solar customers and PPA solar customers, and they do evolve in value a little bit over time, but the data is being flooded with half-value customers, and we have 27 consecutive quarters of it. Sorry, correction, 28 quarters. At some point, we should see a relationship. Let's find out. There is absolutely no relationship.
Yeah. Yeah, because the average total customer value was barely moving, which that doesn't make a lot of sense.
That was this
that's
here, I think.
Struggling, and then he ran a random number generator.
Yes.
And it didn't.
Where you couldn't tell which one was the random number generator and which one was the right one.
Here on the left, you can see the quarter-by-quarter proportion of Sunnova's customers who are in the blue or red categories, up until the first quarter of 2024. Given that they start out as a literal rounding error, so either 0% for the first 4 quarters, and they grow to become 34% of the overall customers, you would expect that at some point, the addition of all of these low-value customers would have a noticeable impact on the average value of all the customers. Like, yes, there is some noise in the data, and yes, the average value of your typical run-of-the-mill home solar system has increased over time, but there's 26 quarters of data, there should be a relationship. And that relationship should be big enough that we could see it here. So right over here, I've broken out the average TCV twice. This is the average TCV if you exclude the surface and cash sale customers. One version of these numbers is the average TCV broken out by all 26 quarters, and all of the quarters are in the correct order. The other one is the average TCV broken out by all 26 quarters, except I scrambled the order of the random number generator. Can you tell me which one is which? I feel like it should be pretty obvious which version of the numbers was fed through a random number generator, but it's not. Isn't that really strange? I thought that was strange.
And then there was even a comment in a cell saying, use the same numbers in multiple contexts, right? So it's like,
yeah, that's the name of his YouTube channel. It's called Cell EN567, which is the cell that said that. Which is like, this guy is undersubscribed with like 48 subscribers, doing
God's work,
comedy like that.
Yeah, because he knows it's clear he's got a good handle on this stuff, and he was pretty funny about it too. Which to make this stuff sound funny, that's a pretty good trick.
So was there anything in particular from an accounting standpoint that when you were looking at the books that really like stood out to you from the videos he was talking about?
The O&M I thought was, the customer account stuff, like, people play games on the financial analysis side of things. That's always a thing. But for me, like the O&M not valuing the repair stuff, like that's a problem.
And as you can see, once we untie this Gordian knot, it's pretty clear that Sunnova's O&M expenses are totally out of control. Their actual O&M per solar system, according to my analysis of the hidden data, is way higher than the reported O&M per system. Like in 2023, it's slightly more than quadrupled over the reported. Now, this is a problem because the reported O&M is very similar to what the pre-sales indicate Sunnova's being paid for servicing the systems in the securitizations. So that means the difference between the O&M as reported and the O&M as I just calculated it is roughly the difference between what Sunnova is being paid to do the O&M and what Sunnova is paying or spending on doing the O&M. I don't know about you, but to me, this looks like an O&M death spiral.
They had Sunnova had 105 million, and they had decided to allocate 56 million to G&A rather than O&M. That, like, allocating that to G&A, it's like, that's a little weird to me. But again, I'm not a solar expert, so
right.
All that the 161, right? So the problem is you're dealing with consolidated financials, right? And it's just at the high level, it's hard to get all the ins and the outs, right? To know
because it's not the full thing. It's just the consolidated to the quarterly.
Yeah, because internally, like, I can see all the pieces, and I can know if I got a decrease of 50, it's probably actually a decrease of 100, but I got 50 add backs to get to the net 50. But we're only seeing stuff at the highest level, right? So
yeah, and that's the problem going with quarterly instead of the yearly 10K ones, because 10K is the ones that's fully audited, and all the quarterly ones are your consolidated financial statements. They're not exactly the full meter stick.
Yeah, but the fact they filed bankruptcy is pretty damning.
Yeah, right? I